This is Tuesday, December 22nd trade review. I'm gonna be going on over my trades today. First, let's look at my P&L. This is just the last 2 days. How do I get to? So today I'm up. Close P&L $1,670. I made 1620 on ELYS. WWR made $20 and AQMS $30. Not even notable hardly, but yeah, it was a good day. First, I'd like to go over my respected P&L percentages, how well I've been doing over the past few days. If we look at my journal, on Friday, I didn't trade yesterday. I wasn't really feeling it. Didn't really wake up in time. So Friday I made $720, and today I made $1,670. But I'm overall pretty happy with the past couple days. I only took one loss for $10. The rest of them were like 2 and 3%ers. So where's the detail? There it is. So let's see. My average trade gain is $341. My largest gain was $16.20, and then my largest loss was $10. So that's really good. And my number of winning trades is 6, and losing is 1. So I won on 85% of my trades, which is really good, and my loss was super low. So my ratio, my batting average, everything's running pretty smoothly here, and it's good to go through these statistics because it allows me to see which trades exactly work and what don't. But I've been trading my one strategy over and over again, and it shows that 85% of the time it works so far. So, but those statistics are more accurate after about a month of trading nonstop. You want about like 15-20 days of trading to really see how well you're doing. So yeah, let's go over the trade today. ELYS, traded this right up in the morning. I already kind of mapped out everything that was going on. I did upload a live trading of this, but I want to go back and look at it. So first of all, I have a checklist that I go down on what kind of trades I take, and I do the triangle breakout. I have my own rules for it. I have my own steps, own rules, and I just do it over and over again. And that way, it's just grinded into my brain, and I can just kind of understand and see it right when it comes up, because you have to be quick when trading momentum like this. So first thing I do is I look at the yearly or the daily, 1 year, 1 day, and you'd see right up in the morning it gapped up. There's a gap here, so that's already pretty bullish. When stocks gap up, there's usually going to be follow through a lot of the time, and also the fact that it doesn't have any overhead supply, none notable. We're just not going to work here. I'm gonna have to cut this here. The Wi-Fi went out. Okay. Anyways, okay. So I look at the daily, and there's no overhead supply, which means that when there's overhead supply, say down in here, this hits a high here. Down in here, whoever's buying down here has to filter out the sellers. So all these guys that got in up here at 3.5, say, and they're trying to buy in here, they have to filter out these guys that are selling up in here that are like, oh, I just want to break even, so they set limit sells here. So no overhead supply. Take a look at the 1 minute. It's starting to form what I call a triangle under accumulation, low volume. Let's draw it out here. You draw out the significant lows, whatever makes you feel most comfortable. It's probably good. And then you draw out the highs of the day. At this point, where's VWAP? This point, it's above VWAP. It's going above VWAP strong. Strong momentum. It did completely come down from pre-market. So that wasn't the best, but it had everything else going for it. So it's like, screw it. I'll be conservative because it doesn't check off everything on my list. But it does enough. Let's get let me close this back here. Okay, so let's get into the trade. My first entry, these little triangles are where I enter. My first entry was here. I tried to dip by this, but didn't get filled. So I ended up getting in at about 682. And then I thought it was gonna break here because it had already two significant highs, and it didn't break here. It was above average volume. Then it had a lower volume pullback, and as we can see, look at the way this candle closed. Very thin on the red side. That means that as soon as it dipped down to here, buyers were coming in, pushing it up. So I tried to get that. Again, I bought another 1,000. I knew that was bullish. And then I looked for the break of the high. Came on the next candle. And it broke through. And of course, I always like to take profits. Take like 1,000 off the table. I had 4,000 shares, I think, at this point. I always like to take 1,000 off the table right away just to lock in some profits. And so if it ends up putting me down at a loss, have a very low risk of losing any money. So I sold here, and then I bought back in down here on this dip, which was a great re-entry when it's almost always after it breaks that high, it has a dip right back down to the original resistance line. And I bought some there, and then I sold up here to give me even more cushion, just in case this thing reversed on me. And then it ran all the way up to 7.5. I sold 1,000 here. I was looking for 5 or 6.3 or something like that, but you'll never get your resistance line. It's always going to be whatever. You won't always get the high. So pretty happy with that sell there. It was 1,000, but now I'm holding, I think I was holding 2,000. And I saw this red doji engulf this, and I tried to get out here, or up here at least, and I ended up having to get out down here because my order didn't fill because I am using this new program and still trying to get used to it. And I basically, at that point, I bought the ask on the sell side, so it puts in basically a limit order. Like I could do buy here and it would do market, but then I'd go and do a limit. And anyways, it put in a limit order, so it's only gonna fill my order at that price. So when it's going down, you want to buy market because you want to get out before it's at the absolute low. So I put the market in order in right here, and I know that was a long explanation, but that was the play of the day. I knew after this red doji came, it was just going to keep going down, blah, blah. Might have a head and shoulders, but I knew it was going to completely collapse. So overall, good trade. $1,600 in the bank, and then what's the other one? The other two I was just screwing around on. I was trading the same breakout, but it was later in the day, and it seems like volume's drying up because of Christmas. So yeah, overall good day. Yeah, I always like to, at the end of the day, go over my trades like I am right now and talk about something I did well and something to improve on, whether it be multiple things or one thing. And today, I think what I did really well the past couple days is sticking to my strategy. I've just been trading this over and over again. Every morning I read over my steps, what I'm feeling, psychology, all the aspects of being a day trader. And I've stuck to that, and it's kept me in the right mindset, and it's what's kept me from taking any losses and having two pretty good green days after a bigger loss on last Thursday, I think. So yeah, and then something to improve on. I say this, but I don't think it holds true a lot of the time. I say let my winners run longer, but as we can see, if I would have let this thing run, then I would have gone out from possibly a loss. Um, so yeah, maybe give it a few more minutes. My average holding time I think is like 4 minutes. Yeah, like average hold time for winning trades 4 minutes, and so like it's very quick, in and out, in and out. It's great. Um, ooh, something to work on, and this is a good this is a good thing for anyone to work on, is your risk to reward. So it's something very simple before a trade, that you can kind of calculate. Um, Before you enter, you always want to put your resistance and your support lines. What I do is I always put in the high, and I always put in where I would take the maximum loss. So let's say on this trade, it looks like there's resistance or support here. So at 662 is where I have my stop loss. And if I'm getting in at 682, that's a 20 cent downside. Okay, so if I'm getting in with the same shares, everything, there's 20 cent risk to the downside. I don't know how much that is in dollar amount or percentage, but that's what you can look at right before you enter a trade. And so now if I enter at 682, my stop loss is at 662. There's 20 cents, so I'm hoping to gain double as much as I'm willing to risk. So what that means is that if there's 20 cents that I'm willing to risk on the downside, there should be 40 cents that I'm willing to risk on the upside. Meaning that if I look at the larger charts, um, if I look at the higher time frame, and we need to see the resistances. So on the 20-day or the 20-day, the first resistance is 620 or 720. I mean, sorry. So let's say that that's going to be my first price. That's going to be my price target, right? So if we draw that in here, 720 or 715, whatever, my entry's at 6.8. That's a 40 cent gain about. That's a little under 40%, or 40 cents rather than 20 cents on the downside. So that's good risk reward. That means that if the trade does what I want it to do, I have a better chance of getting that price. Does that make sense? I don't know who I'm saying that to. I'm fucking alone in this room, anyways. Um, so my support's down here, 662. My price target is 722. Let's say. That means that if I take a loss on this, if I take a win on this, I have a twice as better chance of taking a win on this than a loss. And the bigger picture, of course, is always minimize risk, maximize opportunity, and probability. You want probability on your side in these trades. And the crazy part is everything that I'm explaining right now, it needs to come lightning quick within minutes. So yeah, it's just keep going day after day. I'm happy with $700. I'm happy with $1,600. I'm happy with $50 as long as I'm green. As long as I'm not taking huge losses, I'm happy. So overall, good day today. I want to keep this going. I want to keep my win percentage above 66. 75% of the time would be ideal. And yeah, it's just crazy risk to reward here. Look, my loss was $10. Largest gain $1,600. And it's just, my overall PL now is $2,300 in 2 days. So over time we'll come back to these, but I think once a month I'm going to try to do monthly check-ins, just see what my accumulative P&L is, and keep it going. All right.